You're at One World Trade Center. Our guest is Andy Lobred, president of Advanced Automotive and Catalyst IQ. Andy, thanks so much for joining us.
Great to be here. Thanks, Jamie.
So, Andy, tell us a little story. Tell us about the creation of Catalyst IQ and how it relates to and does or doesn't compete with Constellation.
Yeah. First of all, thanks again for having me. So our journey to get to Catalyst IQ, I think, is a really interesting one. And perhaps I'm a little biased when I say that, but I definitely think it's a unique one. Our parent company, Advanced Local, has been in the automotive business for years. Its legacy around local media. And so over the last 6 or 7 years, we've done something that I believe no one else has done in the industry. We've homegrown 2 businesses, Zero Sum and Cloud Theory, and we bought 3 businesses, AdParents, Fox Dealer, and Search Optics. And so over the last couple of years, we put ourselves, we think, in a position that's wholly unique, as I said, in the market. Our focus is really on leveraging AI and machine learning. We've been in the AI business before AI was cool. We launched Market AI in 2020, before most people even were using the terminology or really even focused on how machine learning could change output. So our focus within Catalyst IQ is taking that history and that heritage and leveraging what we think is wholly unique from our perspective, which is our human capital. And that's obviously where you get the IQ in the name. We're 200 employees strong. From the businesses we've acquired, we still have 8 founders that are still part of our business. So we've got a rich history, certainly, in getting to this point. We feel like that all of this puts us in a unique position to lean in on 2 things that are really important, I think, as we move forward. Number one is precision. Dealers are looking for it. Consumers are looking for it. Certainly, our employees are looking for it. And the second is scale. And so we think with the launch of Catalyst IQ, we've got something that others don't have in the industry. And we're really excited to bring a lot of this technology to the forefront for our dealers and OEM partners.
I find it fascinating that Andy does things so quietly, but owns everything, like I said. So, the funny part is, yes, he rebranded recently to Catalyst IQ, but Andy obviously owned a company called Zero Sum, which everybody understands what they did on the data and analytics side, and also Cloud Theory. Those are homegrown companies. And of course, the rivals I have had in the digital marketing space, where we run into the certified programs, I'm in the IMR program, and so is Fox Dealer. And of course, he owns Fox Dealer. And then I'm in the Volkswagen certified program, and there is AdAppearance. And who owns AdAppearance? Andy again. And then I come across Search Optics all of the time. And who owns Search Optics? Andy again. So Andy has bought up all of these companies and then now rolled it up into Catalyst IQ. What a powerhouse.
But look at what's happened in the last 5 or 6 years within the space, right? When we launched Zero Sum, you could win in the space being an off-program tier 3 provider, but you can't really do that now. So those acquisitions were very strategic for us for a number of reasons. Number one, they got us in the OEM certified business. Number two, they allowed us and our business to diversify. And so we've shifted now we have a really nice balance of tier 1 relationships. You and I have talked about that a lot. We now have a pretty healthy balance of tier 2, and the bulk of our business is still tier 3, but we've been on a really deliberate journey to try to get to that point. So we're excited about it. Sorry if I was too humble about it. I guess that's my upbringing. But nonetheless, we're excited about what we're doing, and we think the sky's the limit for us and for Constellation as well.
Andy is humble, but I will tell you, he's an entrepreneur.
Andy, you mentioned the importance of precision as well as scale. How does that help the dealers? What specifically do they win from having that level of precision?
Yeah, no, it's a good question. I think now more than ever, dealers are challenged by the just abundance of data that's out in the marketplace. And so what we try to lean in on are actionable insights. And so from our perspective, sharing details on turn rate, certainly important. Sharing details on vehicle movement by market, certainly important. But what we try to lean in on are what are the actionable insights that get you to better business outcomes. So we don't want to be in the business of constantly pushing advertising solution A or advertising solution B. We want to use our data and insights to get the dealer's objectives first and foremost, which obviously is increasing vehicle velocity, improving turn rate, and ultimately driving the best economic metrics that they can for their dealership. And we try to do it hand in hand with OEMs. So we think there's a really unique opportunity to connect tier 1, tier 2, and tier 3 through similar insights, because ultimately at the end of the day, the OEMs want what's best for the regional associations, and the tier 2 guys want what's best for their dealers. So we are really focused on connecting those dots as seamlessly as we can.
I mean, I think that so many of these media packages that have been made in the past 20 years, I'd say, in automotive, and obviously I've only been doing this with Constellation for 10 years, but there hasn't been any changes. And I think that it's very frustrating because in order to actually do AI in any of this, you need to be able to collect all that data. So I believe that it all needs to get turned around, and there needs to be a part of where we actually incorporate consulting into the media packages, that it shouldn't be a package unless there's some identification of what the sales goals are, the pump in, pump out numbers, and many other metrics that should be measured before coming up with how much a dealer should actually spend even in a media campaign. I love how Andy has always taken that approach with zero sum and always been data driven with the consulting.
So because we've been in the business of collecting this inventory data for literally greater than 10 years at this point, we feel like we're a leading provider of not just what happened before, but what's going to happen next. And so our media mix, as you said, Diana, is really geared toward proving and improving business outcomes. And then we always say, hold us accountable. Like, did what we say was going to happen? And generally speaking, we feel pretty good about our ability to connect those dots as well. So our heritage has always been data and inventory. We've been selling software as a service since 2019, 2020 to dealers. And it's one of the reasons why, if you look at our connect rate or attach rate on software with our media, it's north of 95%. 95% of our tier 3 dealers are choosing to buy our software as well as our advertising solutions, because they know the sum of the parts are better together than they would be if they weren't. So it's a key part of our value proposition for sure.
So tell me, guys, is this going to be like 2008? I'm scared. We've got the Iran war, and we also have, gas prices going up, up, up. We have tariffs that happened all last year. How's business been? Is this going to be like 2008 all over again?
We pay a lot of attention to consumer confidence, and I'm sure you all do too. And the unfortunate reality is we're at COVID levels in terms of consumer confidence. If you look at the tariffs, if you look at the geopolitical environment now in Iran, just the overall wobbliness of the economy. Yeah, I mean, I think we're all right to have those concerns. So far, for our business, we've not seen a dramatic impact. I think where we are seeing an issue and where dealers are really faced with this is they're pulling back budgets to move inventory because there's so much uncertainty at their level. They're struggling now with allocations. We haven't really used that word since COVID. I think that's more of a fear than it's been in the past. And obviously consumers are still buying cars. That's happening. But what's not happening in many cases is, new's not moving at the same rate that CPO and used is moving. So obviously that's changing the pricing equation for dealers and changing how they go to market. So I think those things are really impacting us more. But right now for our business, we're not seeing a tremendous amount of impact. But I think you're spot on, man. We are really amidst something we haven't been amidst since COVID.
Andy, I recently have seen some of the stats that you guys are doing right now in the automotive industry, and I find it so fascinating. Please tell the audience, give us some stats that you have.
Yeah, I think there's a couple things going on right now that are pretty interesting. I mean, if you look at just overall new pricing over the last 6 weeks, really probably largely tied to the conflict in Iran, we've seen new car prices go up by about $1,000 over that period. Yeah, about 2%. It's actually the highest number we've seen since September of 2023. So pretty big movement in really a relatively short period of time. About 2/3 of that increase is actually coming from true price increases impacting consumers. About the other third of it is coming from just the movement of lower price vehicles in the market. That's obviously impacting what's left. So the remainder there is obviously pricing at a higher level. So that's really been, one of the biggest things we've been focused on over the last couple of cycles is really better understanding that and how we position that with dealers. And our message to dealers, as we're seeing new really slow down, CPO pick up, used picked up, as I said, is really, I guess, helping dealers understand the balance between moving vehicles and profitability. And also understanding that right now, the midpoint for everyone might be affordability. And I know that's something you hear in the news all the time, but it really does ring home in the data that we see. If you see the trends and what's happening, it really does tell us that that's front and center. The other thing I'll tell you that's really pretty interesting too, we saw and everybody saw EVs really plummet after the tax credits ended, right?
Yeah.
And so that had really hit a new low point. Obviously, with the gas prices, which are just absolutely insane right now. If you filled up your car recently, you know exactly what I'm talking about. But we've seen EVs start to increase dramatically, like 35, 40% over the last 4-week period. But what's interesting, and I actually believe what will win the day, and back to the issue of kind of scale and sustainability, are actually hybrids. Because the starting point for EVs was so low, 35, 40% growth off EVs when they're selling a very small number each day and each month, probably not going to be a sustainable number. But when you start to look at the hybrid counts, which are 8 to 10 times what the pure EVs are, I think hybrids ultimately are going to be the winning formula. And I think smart OEMs, smart dealers right now are probably leaning in on how they can make that a more sustainable part of their business, because the data shows us that that is much more likely to sustain than some of the other trends that we're seeing right now. So that would be my stock tip of the day for you, Diana. Invest in those that are heavily invested in hybrid.
Andy, I'm curious about, like you said, the average marketed price has continued to go up. And I'm having trouble squaring that with the falling consumer confidence. I would think that, discounts would be higher when consumers are so rattled.
Yeah, I think a couple things. Obviously, the most recent data we have is from first quarter. First quarter produces, a lower typically volume than other quarters of the year. So I think we're seeing probably a little bit noise in the data. But if you look at it, Jamie, and just see the movement in used and CPO, I think that tells you people still have, ultimately, if they have a need for a vehicle, they have a need for a vehicle. The market generally produces what it produces, in our view, and looking at the data. What really drives the difference are incentives, as you said. Certainly the dynamics at a local market level. We're seeing a lot of trends right now that suggest to us that certain parts of the country, as you might imagine, are producing better results than others. So we're seeing better data in the Southeast, better data in the Southwest, perhaps some of the pockets of the country that are more heavily impacted by inflation, maybe the Northeast, California markets, et cetera, are really struggling because of inflation and gas prices and other things that are impacting them. So I don't know that there's one thing that I would hang on there. But as I said, I think dealers are still moving cars. The cars are just falling where they're falling based on incentives and based on local market dynamics. But everything we see right now is the CPO and used market is really high.
So the latest thing I've been hearing from private equity, but I think it's all over the place and it's all over the news, these words, the SaaS apocalypse. And so many of the investors are now saying, will we survive the SaaS apocalypse?
Well, I hope at least two do. I hope at least two survive. So one of the things that I think is super important for people to remember as it relates to AI is not necessarily the AI applications themselves. I mean, my senior in college can build agentic AI apps certainly better than I ever can. The winning formula for that, in my view, is what is the structured data on the other side of the app. And for us, what we're really leaning in on are as I said, 10 plus years of data that we have tracking inventory and tracking market dynamics. So when we attach agentic AI apps to our data, we feel like we're going to produce a better outcome than others. So our going forward hypothesis is the winning formula is just that, more structured data. The vendors that attach new data sets to what they have today are going to win. So what we're focused on right now, in addition to inventory data, how can we add new data around incentives? You and I have talked about creative, right? How can we do more with creative and lean in on AI to make the creative smarter? What are we doing around CRM data to ensure that, again, the business outcomes that we're selling and promising to our dealer partners are influenced by data, and AI is just making the data smarter? Because if we don't have more structured data on the other side of it, we're not going to produce better results. Our thesis is this is a great category. And Diana and I have talked about this a ton. In most markets in the country, automotive is the single largest local advertising budget in the DMA.
Yeah.
So scale that up, 200 times over in the US. You got a heck of a market that's only going to grow faster, and we want to be a key part of it. And I'd like to think we're kind of the little engine that could. And we're more focused on building value for our employees, building value for our customers. Diana always jokes with me about the humility thing. And again, we know our track record's been great with growing the business. We know our track record's been great with employees, and most importantly, our customers. So that's really what we're focused on.
I love working with Catalyst IQ and Andy. They're super collaborative, very smart, and always knows everything that's happening in auto, always cutting edge.
Yeah. And I think you asked the question at the top of the call about like friend or foe as it relates to competitor. And I think we operate in a slightly different space. And so that allows us to collaborate a lot, partner a lot. I know we've got a couple of things out there that we're thinking about that I think could help us both. So, I mean, look, it's a big world. There's a ton of opportunity. You need friends, not enemies. And I think what Diana and I have been able to figure out so far so good is how we can collaborate in the market and create an environment where we both can win.
So I think that people ask sometimes whether we compete. And I have to say, Andy, we don't compete very often, and mainly because I think we can differentiate a little bit. We have a lot of the highline OEMs, and not saying Andy doesn't, but we do have a lot because of our creative. And so I think when people think of Constellation, they think of our creative data, our creative chops, and the beauty of our creative. Whereas I think when people also go to Andy, it might be a different focus on that data.
But I do want to bring it back to the dealers one last time. Is there, any sort of parting thoughts, final thoughts for them about how they might want to steer through these rocky waters?
Yeah, no, it's a good question. I think we talked about it a little bit. I think it probably varies, as Diana said, a little bit by, higher line or volume dealer. But a couple things that we've been telling our dealer partners and really hearing from our customers and our frontline salespeople. Number one, I mentioned it earlier, like lead with affordability. Make that front and center. I think that's a huge implication for retailers. The second one I would say is use incentives very surgically. Like think about how you can drive target discounts where they can drive conversion without significantly eroding margin, especially without eroding margin unnecessarily. So that would be the second. I would say, and you're probably not surprised to hear me say this because of our business, but I would absolutely lean in on supporting VINs with a level of precision. So targeted support based on what the data says. We really work closely with our partners to try to show what is happening in their backyard, and also obviously what's happening at a broader level. So I would really lean in on precision in terms of how you're executing marketing dollars. Again, driven by what the data is saying in your particular market. And then lastly, I would just be prepared, like probably all of us in our life are right now, as it relates to spending money, for just longer decision cycles. It takes people a little bit longer. If it costs $100 to fill up your car today and it costs 60, it might take you a little bit longer to make a decision on whether you buy that SUV or whether or not you buy that hybrid vehicle that we talked about earlier. So those would be just a couple things that we're seeing right now in a couple areas that we're talking to our teams about.
When I've talked to OEMs and have had some meals with them, some of the discussions that I hear sometimes is that they're not going to ship as many vehicles into the United States next year because, it's so expensive. The auto industries have lost billions last year and continue to lose billions this year because of the US tariffs. So I believe that there may be a future where less vehicles are going to be shipped in the United States, does it affect the footprint here? Does that mean we need as many dealerships? The biggest banker in the United States, and everybody will recognize his name, and we are going to have them also on a different podcast, and I were having lunch a couple weeks ago, and he mentioned that this is the best time to be an automotive dealer, and mainly because autonomous agents have now entered the market, making operational costs for dealerships go down. And so he's saying once all of this in dealership, we don't need the kind of manpower that we are hiring right now out there. And these dealers will be the most profitable in the future. Best time to ever own a dealership. Jamie, Andy, do you think it's true?
The skeptical journalist in me thinks, a banker always thinks it's a good time to do a deal, just like a car dealer always thinks it's the right time to buy a car. We've seen 4 years of declining profits from the, record highs of COVID. To argue that they're going to go back up and up seems maybe a little bit overly hopeful. We've talked about it before. We're just not seeing really big improvements in productivity, by salespeople or service techs. Sometimes there are tools that use AI that can make them more efficient. But I don't know. I'm not sure that there are much better days ahead.
Wow, a skeptic. Andy, what do you think?
I think in the short term, just to piggyback on what you said, I think in the short term, I absolutely agree. I don't think you're going to see a rapid bounce back in terms of dealer profitability. But here's what I do think. I think much like scale matters in our business, right?
Yeah.
Having the sum of the parts be worth more together than they would be apart, I think it absolutely translates to dealers. And I think that's why you're seeing so much buy-sell activity. The economies of scale there are way different than ever before. So I think that will drive a lot more buy-sell activity, absolutely. On the production side, I think what I've come to appreciate over the last, whatever it's been, 6 to 10 months, where we've been dealing maybe with the fallout of the tariffs and the launch of the tariffs, is really the need for these manufacturers to be, they're global sellers of vehicles. They need to be global producers of vehicles. And I think where you see certain manufacturers maybe not have the same domestic production, that's where those are the ones, Diana, that are saying the number one cost associated with selling a vehicle is actually the shipping of the vehicle. And so I think the dynamics will change. I also think, I've been using this phrase a lot lately, and maybe I should stop using it, but I think a lot of things we're dealing with are moments in time. I think the moment in time is so unique because we're dealing with, no matter what your political beliefs are, a pretty unique environment here. And I think the geopolitical ramifications of everything happening right now may cause us to draw more conclusions about the future than maybe are realistic to conclude, because we're at a moment in time where there's just so many unknowns about what's going to happen. That war ends in a week, and the world could look very different than if that war lasts another 6 to 12 months. So I'm trying to, pump the brakes, no pun intended, a little bit, and not draw a ton of conclusions about it. But I do agree with you. I think it's a terrific time to be in this business because there's a lot of innovation. Companies like ours have brought a ton of innovation to the forefront. We're only going to do more by investing more and being more responsive to what we're hearing from our customers. And I think there's a lot of private equity that wants to get into the space, whether it's the traditional dealer space or whether it's the innovation part of the business. And, you don't need to pick up Automotive News or the Journal regularly to know how much money is being put into the space. And so I think it's a great time to be doing what we're doing.
Andy, thanks so much for being here. It was so great to have you with us.
Thank you so much, Andy. We obviously enjoyed ourselves so much. So let's do it again.